What's the elephant in the Florida room? Insurance. And today we're going to talk about it. Yo, I'm Adrienne, longtime Florida realtor, and I'm here to help you get your Florida life. Happy Wednesday, everyone. As you may know, new videos come out on this channel every Wednesday. Today we're going to talk to my personal homeowner's insurance agent, Erin Galley from Nolan Insurance. She's going to break down what's going on in insurance, what you need and what you need to know. I do have a quick announcement as well. When I started this channel, I really wanted it to be about getting your Florida life, more than just pretty pictures of houses, because there's so much access to that already on the internet. And I still am going to do that. Every Wednesday, you're going to see videos about things like insurance. But it's come to my attention that it would be nice for some of you to go through houses with me together so we can really look at location and that type of thing. So that's going to start this week. I'll sort of intermittently be putting houses on the channel, not on Wednesdays. Wednesdays is still going to be what you are used to every Wednesday, information about the area and market updates. And again, stuff like insurance, but a little bit more throughout the week. So you can subscribe if you're interested or just check back with the channel. And now our interview with Erin. Introduce yourself, tell us who you are and how long you've been doing this.
Okay. I'm Erin Galley. I'm an agent over at Nolan Family Insurance. I've been in the insurance industry since 2008, all in Punta Gorda. And
Yeah. Do you go over to Port Charlotte? You go to Port Charlotte?
Yeah. Our office is located in Punta Gorda, but we do all of Charlotte County, Sarasota, Lee, Collier. So we do surrounding areas.
Oh, okay. All right. Yeah, you're right in Bird Store Isles, basically, correct?
Right off of 41.
Let's start out with just explaining, like, when somebody buys a house here, they need homeowners and flood insurance. Can you just give us the basics of, because as you know, a lot of people hear flood and they think of rain, and, give us the basics of what a person needs around here.
Breakdown is, so flood is just simply rising water. It rains 40 days, 40 nights and causes the water to rise and get into your house. That would be flood insurance. Or if during a hurricane, the storm surge comes in, that would be flood insurance. So that's rising water, which is excluded on a standard homeowner's policy. That's why we need to get the separate policy. And then your homeowner's policy would include everything else. It would include fire, wind, liability, pipe bursting in your home causing water damage. Those typical things are held on a homeowner's. Requirements for closing: the only person that's requiring you to carry insurance would be a mortgage. Everything else is choice for homeowners. So you get a lot of cash buyers that the insurance might not typically be on their front burner until it comes to closing and goes, oh shoot, we need to get insurance in line. So this would be the phone calls that we take.
Yes. I will say that I always really try to get my buyers to, during their due diligence period, at least get quotes. Like, at least do that so you know what you're getting into.
Yeah, and the Florida market is a whole different ballgame. We've got a lot of out-of-staters coming in to buy property insurance in Florida, and it's way different price-wise, coverage-wise, way different than in other states. So it's good to look at that on the front end for sure.
So as you mentioned, cash buyers don't have to get anything. However, citizens nowadays, if you're getting citizens insurance, which is our state insurance, correct me if I'm wrong, are they making you get flood insurance?
Yeah. So anything in a special hazard flood zone, regardless of if you have a mortgage or not, Citizens does require you to carry flood insurance. Now, as the years go on, 24, 25, 26, everybody, regardless of special hazard flood zone, is going to have to get flood insurance if you want to take the state flood coverage, or state, if you want to take the Citizens policy.
Right.
So it is a prerequisite for citizens. So
just to fill everyone in, the typical flood insurance around here, or the flood zones around here, are AE, X, and D are pretty much what we see around here.
See a little bit of the velocity zones over on Riverside Drive or Peace River Drive, but AE and X are two. X is the special, or is the preferred risk policy. AE is a special hazard policy. So if you've got a mortgage, the mortgagee is going to require you to carry the coverage in an AE zone.
Yeah, but you're not going to be required to carry it in X, correct?
Correct. For
Right.
mortgage.
However, and this is a little pet peeve that I think just I have, X is still a flood zone, correct?
The entire state of Florida is a flood zone.
Because I
It's
see
less risky.
I see, and a lot of people say, not in a flood zone, not in a flood zone. And I'm like, I don't think that's correct. I think it's in a lower hazard flood zone, correct?
Exactly. And if you look during Ian, a lot of areas in Cape Coral flooded that were not in a flood zone, and a lot of areas in North Fork flooded that were not in a flood zone, but those were the two of the bigger sources of flooding during Ian.
So, yeah, the flood zone X, you mean?
Mm-hmm. Yep.
Yeah. So it is very confusing because people go, oh, I'm safe. And, it can flood anywhere. So
traditionally, those used to be cheap policies. You used to get a policy under $500 for those preferred risk flood zones. Nowadays, a lot of other new rating factors come into play, and it's not.
So if you're not in a flood, or if you're in flood zone X, I try to change that. If you're in flood zone X, which is the lower hazard, which you used to get under $500, are you seeing policies the same price or close to as the AE, the more higher hazard flood zones? I mean,
no, we're seeing more similar to the more similar to the AE zones. So now there's single risk modeling. So they're taking your distance to coast into play. They're taking your construction type into play. They're taking past claims history into play with these rates. So they're more mirroring what a special hazard flood zone would do.
Homeowners have what kind of options we have regular homeowners insurance, like a regular company, then we have the state insurance, and I've heard about like surplus companies. What are the differences and what are the advantages, disadvantages of those different kinds?
So the standard markets, the private company markets, those are regulated by the state. So they're not state companies, but they're admitted markets regulated by the states, meaning any coverage change, any rate increase, rate decrease has to be approved by our Office of Insurance Regulation. So it's a monitored entity, and most of the homeowners policies that we see written are standard private markets. There's only one state market right now, and that's Citizens. We're seeing a lot of Citizens policies being written because of the standard markets, age restrictions on roofs, zip codes being closed, capacity being closed. So we are seeing the state-run Citizens market being used a lot. And that, Citizens is backed by the taxpayers, put in as a last resort insurance company, so everybody could have access to an insurance policy. And then we look at the surplus lines market. Those are for kind of our special needs risks. They're not regulated by the state, so they can kind of do a little bit more on the unique risks. So if we have an owner that has a home listed in an LLC and rents it for a part of the year and uses it for another part of the year, some of our standard companies don't like to insure those risks, so we look for our surplus lines market that has a little bit more capacity. Most of them are highly financially rated, which is a positive. The downfall is they're not regulated by the state, so they can throw a policy change at you at any time. They don't have to file or follow cancellation protocols. So if you cancel a policy midterm, some of those policies might be fully earned. You might not get a refund back. So there's little things that are kind of downfalls to the consumer. But
how did we get in this mess? Like, what happened? Why? I mean, I know we have hurricanes here, but we've had hurricanes here for a long time. I mean, and I know that after Hurricane Charlie, which was in 2004 and 2005, some insurance companies left, but it seems a little extreme lately. What happened?
So hurricanes have a small percentage of what's actually going on in the market. lawyers getting involved in claims is one of the number one driving forces for all these premium increases. You get lawyers that inflate claims, which costs everybody premium dollars. And actually, there was reform back in December of 22 that's kind of going to help with those fees. So hopefully, we'll see a little bit of an evening out when it comes to premiums due to lawyers. The cost of construction has gone up, so everybody's dwelling coverages should be going up with the cost of construction. So that obviously plays into the premiums. And the cost of reinsurance is going up as the market's doing a little bit better. As a whole, most of our investors are taking their money out of the reinsurance companies and investing it elsewhere. So there's not as much of an influx of cash dollars backing up the private insurance companies, which results in higher premiums. So it's a mixture of a lot of things going into it. The roof, over the last 5-6 years, roofs have been a huge issue. We've been paying a lot of roof damage that probably should not have been paid due to maintenance needing to be replaced on homeowners' own dime, and the insurance companies are ending up paying for these roofs. So we're seeing some reform there. We're seeing some restrictions when it comes to coverages on roofs. So hopefully all of that will start helping premiums and we'll start getting out a little bit.
Yeah, so what I understand is that we had a legislation passed in like 2016 that allowed, basically anybody to sue and then recoup the lawyer's fees, correct? And so because I got knocks on my door. If you live in Florida, you know what I'm talking about. Like, people knocked on our doors and the roofers and the lawyers would be like, we can get your roof replaced, correct?
Oh, yeah.
And I heard some statistic once that it was like in the United States, 2,700 lawsuits happened in 49 of the states, and like 27,000 happened. You added a 0 in Florida one year. And I was like, that's not good. That's not good. So the reform in December is supposed to knock a lot of those lawsuits out, correct?
Yeah. So what it does is, before, if you had a lawyer involved and you won the dispute against the insurance company would be responsible for all of the lawyer fees. So they could be working on this account for 2 years and racking up all sorts of lawyer fees. The insurance company had to pay those outside of the policy limits to that lawyer. So now it puts a cap on those charges. Each individual party has to pay for their own lawyers.
Yeah.
So that will help big time.
Yeah, because I heard of cases where lawyers were making $1 million on a $60,000 roof, and just, it was big business. That's been shut down. Because what fascinates me is, you say, the building costs have gone up, premiums have gone up, but that has to have happened all over the United States. Right. So Florida feels like it's getting the brunt of this, but it's partially because we set ourselves up. It's kind of correct. It's kind of like
yeah, and I don't know the exact figures, but there was a study within the last 3 years of insurance claims dollars and where they went. And don't quote me on the figures, but over 50% actually went to lawyers' pockets of the total claims money paid out, as opposed to the actual homeowner.
Right.
They're benefiting tenfold off of the insurance company.
Right. And now we are paying more because of this. So,
and I'm not saying there's not a time and a place for a lawyer in an insurance claim. There's those needed times. But most of the time it can be avoided.
Yeah. Although we are seeing right now, I know plenty of people are having trouble getting a hold of you're seeing it now, correct?
Correct. Yeah. And those would be the types that, okay, we're ready to get somebody else involved.
Yeah. So you can still do that. It's not like you can't sue your insurance company.
Oh, exactly. Yeah. Exactly.
We're not lawyers, but we're not giving you legal advice, but I'm just telling you that still happens.
It's not taken all the way off the table. You still get representation.
Yeah. So is there any kind of cap on how much insurance can go up in a year?
Mm-hmm. There's only one company right now that has a cap, and that's Citizens. I believe it was Charlie Crist back, 10 plus years ago, put a cap on increases with Citizens. That's the only company that right now that has a mandatory cap. All of the other companies can present why they're taking an increase, decrease to the state. And as long as their figures and their reasons why are all backed up by data, they can take whatever percentage rate increase they want as long as it's approved by the state.
Okay. So my insurance could go up 200%.
Correct. Flood insurance is another one that does have a cap. That is federally run. There is a cap 18% per year on that. But as far as homeowners concerned, Citizens is the only one that I'm aware of that has that cap.
So now, since you brought that up in the 18%, let's talk about that, because flood insurance, which is run by FEMA, correct?
Mm-hmm.
Okay, you know where I'm going. It used to be, I say this to you all the time. It used to be that I could walk into a house and be like, this is what you're going to pay in insurance. Mm-hmm. And now I'm like, don't ask me. Could be $1 million, could be $4. I don't know.
You and me both.
Right. So, and flood insurance used to be if they had what's called an elevation certificate, which told us how high up the house was built above sea level, you could get a pretty good quote in your head. Mm-hmm. That is incorrect now. Have you found, it's been about a year now, have you found a little rhyme or reason to that? Or is it just, you have to just put it into a computer?
I have to run every risk, to be honest with you. The 2021, October of 21 is when they rolled out what we call rating 2.0, so their new rating factor. It took away the elevation certificate almost completely. We can still use the elevation certificate for some credits, but the traditional elevation certificate, tell me what the base floor is versus what is required, and I'm going to come up with my figure. That was the only two rating factors that we were. Now they're taking distance to coast. They're taking replacement cost of the home itself, so square footage. They're taking material. Frame is going to be more expensive to insure on a flood versus concrete block. That never has been a rating factor. They're taking spot elevations in areas. So there's a whole slew of different rating factors that they're taking on each individual house. So there's been a lot of behind the scenes programming on FEMA's part to program this. And I can't tell you
so it's not just me
price on anything. No, it's all of us.
Right.
And when this first rolled out, it was presented to us agents as it's a great thing. We're going to take the legwork of tracking down elevation certificates and having you go out and take photos and do all that. We're taking that away, and it's going to be an easy product. You're not going to see very much movement in rate. Probably only 5% of our area is going to see an increase. Everybody else is going to be around the same premium as the old rating factors. Well, Charlotte County and everywhere that we write must be in that 5% because we've seen huge rate increases.
Yeah. Yeah.
Policy. I worked on one today. Before the 21 rates came out, they were at $715. With the new rating factor, they're at about $8,600.
I'm sorry, $715?
$715 was what the premium was prior to the change. After the change was $8,600 plus.
$8,600. So the 715, was that in flood zone X?
Mm-hmm. No, they were built up 2 feet.
Oh, okay. Okay. So yeah.
Now that that's been removed, they don't get that 2 feet credit. Everything else is going in.
Interesting. Although, not that anyone's going to listen to me on this, when we had Adalia recently and some streets did flood, it definitely made a difference if your house was built up.
Oh, for sure. So, and that's where I say the elevation survey is coming into play a little bit.
Yeah.
But not as much as it did in the past.
Okay, so let's talk about that 18% increase, because I see in a lot of listings, it'll say flood insurance is only $1,200 and it's transferable.
Mm-hmm. Yeah.
Where's that going?
What they're doing right now is they're I don't want to use grandfathering because that's not the word that they're using, but for all intents and purposes, grandfathering the old policy in place. So as long as there's been continuous coverage, they're going to let you assume those rates and only cap you at an 18% increase every year until you get to the real rates, the real new rates.
So let's say that $716 house sold and they transferred the $700-ish flood insurance to the new owner. The new owner could expect an 18% increase in insurance until it got to $8,600, correct?
Correct.
Okay.
Correct. Yep. And to clarify on the assume the policy, you don't always have to take the policy that they have and sign off on it and take their policy. You can get your own new policy as long as we have those old figures. So as long as we have their policy number and the company that they're with, you can get your own policy and not have to deal with the transfer of actual policy.
But wouldn't the policy, I mean, I have flood insurance, so I should know the answer to this, but isn't it all through FEMA or they're different?
It is. Yeah, it's all through FEMA. 90% of it is through FEMA. There are private markets that are out there that are writing flood policies. Their rates right now in our area aren't very good, so you don't see a lot of them written in Charlotte County, Lee County. But the back end of us getting the policy number and the company name is what shows the continuous coverage.
Okay.
They're all linked in the computer. So instead of saying this address at so-and-so, we're actually linking it via the policy number directly with FEMA.
Okay. Really quickly, will you go over what velocity insurance is? I almost never deal with it, but I know it does come up randomly. So you could have homeowners flood and need velocity insurance, correct?
What do you mean by velocity insurance?
Isn't velocity
a wind policy?
So the velocity zones, do they need a special insurance on top of it, or it's just part of it?
No. It's so that would be a separate rating for the flood zone. So velocity zones actually pertain to the flood.
Oh, they do.
Okay. Higher rated company or higher rated policy.
So there's X, AE, and then velocity.
Highest risk is velocity.
Okay. I've sold I don't know if I've ever sold a velocity zone. I've sold a lot of
very, very few in Charlotte County that are in velocity zones. Sarasota, there's some. Fort Myers Beach, most of those are velocity zones.
Right, that makes sense. So, okay. Yep. See change in the future, and are we going to get companies coming back? Because it feels like with the changes, we should, Yeah, knock on wood, as long as we have a couple seasons without major hurricanes in Florida, we should start. I'm not going to say we're going to go down because I don't see that going. I don't see premiums going down anytime soon. I think we're going to seeing them level off. The changes in December with the lawyer reforms, those are going to help. We're going to start seeing a lot of policies go to actual cash value on the roofs to try and combat those increases and those claim payouts. So we'll see that change. Over the last 7 weeks, there have been 5 new filings for companies coming into the state. So we're starting to see companies come back. Downfall with that, they're brand new companies. So they're going to be a little bit more risky right now. But it's positive that they're coming into the state wanting to do business in Florida. So the more competition we get in Florida, the better the premiums and the better the coverages are going to start getting. Yes. And so so the big problem that I see, besides obviously rates going up, although I do think as they level off, it won't be, don't misunderstand. I don't like insurance. I live here. I don't want insurance rates to go up either. But if you know what you're getting into, you can deal with that. You know what I mean? Like, I think that people can, a lot of states have higher taxes than we do. A lot of states have every place has its issues. So I think we can deal with that. So I think once we level off, it'll be okay. What I'm also seeing, and let me know if you're seeing the same thing, although that I've had some strange insurance, not being able to get insurance on certain oddball items in are we going to see them writing policies or not writing policies for all kinds of stuff? These, do you know what I'm talking about? Like roofs that there's nothing wrong with. That has been a big one over. I had a pipe, one pipe in a house that the plumber said is completely fine, and the insurance agent said, no, you have to replace this completely fine pipe. Like, are we going to see that?
I don't see us ever getting away from the pickiness of companies. If that's the word I'm looking for, we're going to still see the same underwriting guidelines. We're not going to see them easing up on those, because those are all based on actuary figures. They're claims that have been paid out, and they're not just picking this one item to be a sticking point to talk about at meetings. They're doing it based off of claims that they've paid. So breaker boxes are a big one. Water heaters right now is a huge one. All of our companies are requiring water heaters built 15 years or put in 15 years or older to be replaced. 15 years ago was 2007. Those water heaters might be perfectly fine. But the insurance companies say, well, our data shows that year 14, year 15, year 16, we're starting to pay a lot of claims based on these burstings. So we're going to pick this number and hard stick to it. So they're basing their underwriting restrictions and their pickiness off of real numbers. So I don't see that easing up. On the roof issue, they're being really picky with age of roof right now. Again, based on their actuary figures. That might ease up a little bit if the state lets them file for actual cash value endorsements. Meaning, if I write a 20-year-old tile roof and the next year a hurricane hits, that 20-year-old tile roof, they may only pay 25% of that claim because that roof was an older roof. So those
the total claim, or just for the roof? So let's say
just the roof.
Yeah. So let's say the roof blows off. Okay. Let's just say it causes other damage, because when you lose a roof or,
so the drywall falls in the house and water gets in, and those type items, those would still be covered at replacement cost. Just the roof itself to replace would be the actual value.
Because isn't there some rule, and I'm just pulling together the little bits of information I know, that in the state of Florida, if so much of your roof is bad, what is that law? You know what I'm talking about? So that's still happening.
Roof that's 7 years or older, if more than 25% of the roof is damaged, the county's going to require you to have it replaced.
Okay.
So it's not an insurance guideline, it's a county building code ordinance.
Oh, okay.
So the county's going to tell the homeowner, okay, you got to replace this entire roof. We can't just patch it. But with an ACV valuation on the roof, the company's only going to pay actual cash value of that roof. So they'll only pay the remaining life.
Okay. So so that could be a shocker if you're not aware of.
If you're not aware of that, yeah. I'm hoping that the agents that sell the policies, and we're all having to sell the policies because it's a restriction that most companies are taking, but hopefully the agent sits down and says, here's a schedule, what it's going to look like if your roof gets damaged next year, what your payout's going to be percentage wise. So hopefully the agents are giving upfront information out.
Yes, that is the hope. So, okay. There's anything else that you see come up that people need to be knowing about insurance these days?
The other thing we're having to do, and it has to do exactly with the roof, is we're writing a lot of what we call dwelling fire policies right now. Traditionally, those were used for people who are renting their homes. But the way that the companies have filed it with the state, they have that roof exclusion in the roof ACV roof schedule is what we call it, worked in. So most of our companies are allowing us to write a dwelling fire policy for owner occupied residents now to get around the roof age. So again, we try to do a good job up front explaining the difference and letting our clients know what we're offering and why we're offering it. But that's a tool that's being used. So dwelling fire policy versus a traditional homeowner's policy.
Speaking of roofs, I do have one more question. Do you see a difference? I know between shingles are getting 10, 15 years out of an insurance company, correct?
Mm-hmm. Yeah.
Tile,
15
right?
right now is basically the rule of thumb.
15 is the rule of thumb on shingle. What about tile and metal?
No, shingle is 10 to 15.
Okay.
Some companies are 12, some companies are 10, but 15 is really their max on shingle.
Okay.
Tile right now is still at 15 too.
Tile is at 15?
With a majority of my companies, 15.
And that's to restart a policy. That's to get a new policy.
Correct.
Right? If you already have.
Now, once you have that policy in place, most of our companies will go to 25 years on a tile roof still. But if you were writing this policy brand new with company A, you're going to have to meet their new roof guidelines.
So what about transferring a tile roof? But no, so if somebody buys a house with a 15-year-old tile roof, they're going to have trouble getting insurance.
Mm-hmm.
What about metal?
Yep. Metal is easier. Most of our companies are either 20 to 25 still on metal roofs. We'll have guidelines change overnight right now.
Right.
So something I tell you now could be changed next week. So.
And now, is that typical in your career, or is it more lately where you're
the last couple years it's been more prevalent.
You have to, they're keeping you on your toes.
Oh yeah, big time. And now we're starting on the auto side. Over the last 3 months, we've seen auto rates jump 35 to 40%. So that'll be a whole new conversation. And
you sell auto insurance, right?
Yep.
I had a customer ask me the other day, I might cut this out, but and I was like, I've had the same auto insurance forever, and I should put them together. It's just something that
well, Florida's a different ballgame. There's not really a company that does both right now.
Oh, okay.
The Erie insurances or the Travelers or the Hartfords or the Safecos, the big national names don't want to be in Florida. So
for car insurance?
No, for homeowners. They don't sell their, so there's really not a bundle option. I mean, there's AAA has some availability for bundling, but that's really the only true bundle that I can think of in Florida for home and auto.
That's interesting.
So, yep.
Let me ask you one more question, then I'll let you go. How hard is it on second homes to get insurance? Is it harder on second homes or investor properties?
It is slightly harder. It's not too cold. It's as long as it's for the investor side, as long as you're not doing nightly rentals, most companies will do annual, monthly, weekly rentals without a problem. Secondary homes, you may be required to get a monitored alarm system for fire and burglar.
So people getting Airbnbs, if somebody buys an Airbnb, can they get insurance for it?
It'll be expensive if it's written correctly. It'll and I say that when I think of Airbnb, I'm thinking, okay, 2 nights stay here, 2 nights stay here. But if you're Airbnb with a week minimum, you can get coverage.
Oh, okay. So
it's the nightly and the weekend rentals that makes it more tricky.
Okay. Yeah. All right. I hear little snippets of that, and I never think to ask you. So, all right. Well, thank you so much. I really appreciate you doing this with me, because I used to be able to answer questions about insurance. I'd be like, I'm not an agent, but here are the answers. And now I'm like, I have no idea.
It's an ever evolving industry, that's for sure. So,
yeah. Especially
we're in the area where we've actually seen benefit from it. We've had not benefit, because I don't wish a storm on anybody, but we've actually used insurance in our area. We're not like some parts of the states where you're just paying premiums and never seeing, premium dollars back. So it'll be interesting the next 5 years to see what happens.
Yeah. Yeah. Do you have any advice really quickly for anyone who's filed a claim and is fighting with their insurance company? Because you don't really do that side. I mean, you're in the sales side, right? But I'm sure you do.
Mm-hmm. That one's trickier because there's so many different variables that go into what's going on the claim side. But keep after your adjusters is my only advice. Call your agent too. We're here to service your policies in full. So if you're having issues with your claims adjuster, call your agent, let them know, and make them get on the phone too. I know we do it for our clients, so it is something that you're paying a service for. So
That's
utilize
interesting that you say that, because usually I hear that I was very lucky after Ian. So I had a tree down and that was not touching my house or anything. So, but I hear the complaints are people can't get anyone on the phone, and often they think they can't call someone like you, or they're not getting but you always, I mean, I never have trouble getting hold of you. So I would assume that is an issue.
No, and that's
their agent.
kind of that's kind of how we run our agency. We're not salespeople. Even though that's what we do, we sell you a policy, but we see ourselves as service managers. I mean, we were out in the parking lot under a tent 24 hours after the storm hit to take phone calls and start calling companies on our clients' behalf. So that's our motto at the agency. Just do the right thing for our clients. So.
Yes, and I refer you all the time. You know that. So that's why. I mean, that's because I get good feedback. So, okay, well, thank you so much for doing this with me. And if there are big changes in 6 months or a year, I might ask you back.
We'll come back. Perfect.
Well, thanks, Erin. Have a good day.
You too. All right.
Bye.